Good morning, everyone, and thank you very much for joining me. This is the DAX Open with myself, Russell Shaw. I'm Senior Market Specialist at FXCM. My email address is rshaw@fxcm.com. I just want to encourage anyone that needs to contact me, just send an email through to this address. Today is Thursday, the 11th of November, 2021. I'm just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. All right, and here's the commentary disclaimer. And just finally, the references. Okay. And let's go ahead and bring up the charts. Hey Shadrach, I just want to double check. Did somebody give you a call? Because I know that you've sent me an email. I've replied to both of those emails. Just check your spam folder. I suspect that the emails have gone into the spam folder if you're still looking for them. All right. Let's just go through some of the news that we need to know. So European stocks are expected to open flat today, and this is as global markets digest the latest US inflation data, which showed faster than expected price rises. The consumer price index jumped 6.2% from a year ago, well above the 5.9% that was forecast from economists polled by Dow Jones. On a monthly basis, the CPI increased 0.9% against the 0.6% estimate. And just to let you guys know that this is the CNBC morning note. Major indexes on Wall Street fell following the inflation data release, with while US Treasury yields climbed. The yield on the benchmark 10-year Treasury note was at 1.57% or 1.5699%. All right, we've written extensively about this on our website, the insights part of the website. So I would also urge you to see our articles. We're really putting some work on that front. Following the CPI data, traders moved up their expectations for when the first Fed rate hike would occur. The Fed funds futures now sees greater odds of the central bank's first full rate hike coming in July of 2022. Asia Pacific stocks were mixed in Thursday trade after the US data, while US stock futures were steady in overnight trade. Earnings in Europe on Thursday come from Bilfinger, Delivery Hero, Merck, Siemens, Aviva, Tate & Lyle, and Burberry, amongst others. Data releases include the latest UK GDP number, which is actually out. I think it was a miss of a forecast. And we'll also see the UK industrial output. I think just before we move into the analysis, we'll just bring up the GDP data and we'll look at the prints. So here it is. And you can see here that the preliminary GDP quarter on quarter came in under forecast, 1.3% versus the forecast of 1.5%. Industrial production month on month also missing. Okay, so just keep that in mind. We'll perhaps take a look at cable as well, which is an interesting currency pair. All right, here's the DAX. Let's take a look at this, and we've still got the 3 points as opposed to 4. Remember, 4 is what's needed. 4 is what's needed for the for a trend. We've got 3, but interestingly, the stochastic is making its way through to 80. It's making its way through to 80, and if it hits 80, we want it to hold 80. So we are at a very, very good area. Okay, we are at a very, very good area. It's now all about the momentum cooperating and sticking in that 80. Then we should get a push. If it hits 80 and falls out, that's no good. Okay, that's no good. It's got to hit 80 and hold. Now you take a look at the daily chart, and we're still in that bullish area. Again, just take a look at that stochastic. It's in a really good area. Now there is a little bit more body to today's candle. Let's just go down to the hourly and take a look and see if there's any signals there. And let's actually take this out. Before we do the analysis on the hourly, if we just go through to the weekly chart, something I should have pointed out. This is the weekly candle here. Let me put in the arrow. This is the weekly candle here. There's no range. There's no body on the weekly. So there's been no movement this week. Okay, and it's already Thursday. You go through to the hourly. Well, you can see that now that we've zoomed right in, there's no range. We've just moved sideways. So it's very hard to make any sort of trade that is, a runaway winner when there's no volatility. So that's the issue that we're having, is that there's no volatility at the moment. So having said that, we do see a trigger on the EMAs. We do see a trigger on the stochastic. There's the triggers. Now, is that going to turn into a meaningful swing? Well, it all depends on market volatility, momentum. The market's got to cooperate. The stochastic has to get into the 80 area and hold. Okay, it's no good hitting 80 and falling out. Hitting 80, falling out. You know what that is? It means that there is just a very brief movement, and then that momentum's gone. And that's why we have a very, very short, small candle for this week. So there is a lack of volatility, which is hurting us as swing traders. Without the volatility, there's no swing. So we're just going to have to acknowledge that's the environment for this week. Perhaps the volatility will manifest today. We'll know that by looking at stochastic and its position relative to the upper quintile. Okay, so we just want to keep an eye on that. Just before we sign off for today, I'd like to do analysis of the cable pairing as well. So let's just bring up cable after we saw the GDP and industrial production numbers. All right, so let's just go through to our weekly here. And you can see that we've got peak, trough, lower trough. This we can change from lower peak, question mark, to lower peak, okay, because we've got the reference candle now locked in. The next area is the lower trough, okay. Guess what? We've got it. So here's the LT. So the weekly cable chart is in a downtrend. It's not a steep momentum. There's no heavy sort of capitulation, so to speak, but there is a series of lower peaks followed by lower troughs. Keep your eye on the weekly stochastic. Okay. Let's go through to our daily here. You can see that we are in the zone 3. Look at the Bollingers. Those Bollingers starting to expand. Okay. Take a look at where we are momentum-wise. We're on a very severe momentum to the downside. We're in the first quintile. Okay, that is the lowest part of the range, which is downside momentum. And if we go through to our hourly, you can see that the hourly here is starting to show 1, 2, 2, 3. Okay, potential movement down here. This impulse really is now relying on the stochastic again. So keep an eye, make sure that stochastic holds that lower quintile. If it tops out, that's no good. So you can see that there is some sort of reaction to the downside, and that after a very heavy reading in terms of CPI from the US side yesterday. So that's what we're going to focus on in our written content today. Nick has already posted some articles on that, so you can go. I'm going to start working on my articles after I've uploaded this onto the website. So I'll keep a lookout for that. If there's any comments, please go ahead and type those in now. Any comments, please go ahead and type those in. All right, nothing in, so we'll conclude here. If anybody needs to get hold of me, please send me an email. Thanks very much, and thank you very much for logging in.